I'm Jerica Hagan, and I'm presenting the financial management of Happy Flower LLC. The most important risks facing the company are fluctuations in pricing, competitor pricing, customer base, and the risk of failure. Most of Happy Flower LLC's inventory consists of grocery items and prices fluctuate constantly. Happy Flower LLC plans to deal with this risk by establishing contracts with its frequent suppliers, Sam's Club and Kroger, to negotiate a set price for each good. Conducting a competitive analysis, Happy Flower LLC determined that their competitors could lower their prices, which could leave the company at a disadvantage. Instead of lowering their prices, the company will offer more value such as superior customer service, payment plans, and frequent flyer programs. There is a risk the company cannot quickly attain a loyal customer base. Happy Flower LLC has developed a plan to help overcome each of the competitors' weaknesses, which could help attract customers. The company will accept online and over-the-phone orders placed at all times and will be open from Monday through Saturday from 10 a.m. until 7 p.m. 501 Marcells Road features freeway visibility, signage, and plenty of parking. Every business faces failure. Each Happy Flower LLC member will contribute $5,000 for a sum of $30,000 to help with startup expenses. The members will also not take a salary from the company until it has generated positive retained earnings, which should occur in year 3. Happy Flower LLC will continuously listen to their customers' thoughts and ideas and improve the business as needed. Here's the pro forma statement of cash flows for the first year of operations monthly. Here's the pro forma cash flow statement for years 2 and 3 for Happy Flower LLC. Here's the monthly income statement for Happy Flower LLC for the first year of operation. Here's the income statement for years 2 and 3 of Happy Flower LLC operation. Here's the balance sheet for Happy Flower LLC for the first 3 years of operations. The return on investment was computed from the balance sheets provided. During year 1, the return on investment was computed as negative 30.27%. This negative amount is due to the purchase of startup goods. By year 3, the return on investment has increased to 9.37%. The increases in equity from the first year on show the company is beginning to generate a profit. The company is on track to meet a return of investment of 15% by year 4 and to maintain this in all subsequent years. Each member of Happy Flower LLC invested $5,000 to help with startup expenses. In return, each member will receive 16.67% of the company's assets and debts. Profits will be distributed on a semi-annual basis. The company will also set up a reserve fund of $100,000 in which 15% of monthly sales will be contributed. The company will be banking with Kentucky Bank in Versailles, Kentucky, and will apply for a loan through this bank. The loan will be for $50,000 for 60 months at 5.5% interest. This loan will be used for the purchase of display cases, a convection oven, a refrigerator, and various other startup operating expenses, as well as the marketing for Happy Flower LLC. Revenue will grow at a rate up to 30% each year, and raw material expenditures will also grow at this rate. Happy Flower LLC will use the accrual method of accounting. Inventory purchases are highest during the first month of operation due to the purchase of raw material and packaging needed for opening. Inventory purchases have been recorded at net purchase amount. Utilities include electricity, natural gas, and water. During the spring, fall, and winter, the oven will help heat the building, so utilities are lower, and during the summer, air conditioning will run and costs are higher. Depreciation has been calculated using the straight-line depreciation method. Happy Flower LLC is a startup company and will not hire employees during the first 5 years of operation. Happy Flower LLC members will be the workers at this time. The reserve fund is reported as restricted cash in the current assets section of the balance sheet and restricted reserve and owner's equity. At year 3, payments to the members will commence. Net profits and losses will flow through the company to the members and will be reported on each individual's tax return. The company will incur $138 state limited liability tax annually. And now to Caitlin for the operations section.